All right, I left this graphic on screen just so you could take a look at it. The idea is that, cash register is a great internal control. It's forcing the person to record the transaction like we talked about. Cash is received and the person counts the cash at the end of the night, and the accountant should then have the sales, and those two items should reconcile, right? How much is in the register versus how much cash is in the register. That is a good internal control. All right, bank accounts. Bank accounts have quite a few internal controls. Some simple ones like signature cards. You want to have approved check signers. Maybe you only have one person or two people required to sign on every check. When you get a deposit ticket, when you turn around and you go to the bank and they give you back a ticket saying how much you deposited, that's an internal control. It's a receipt. You want to have that in your paperwork as well, right? The idea is that you're cross-checking. The person who went to the bank and deposited the money then turns around and comes back and gives that receipt to the person who then records it, or reconciles it, rather, the accountant. Two separate people. The person doing the recording separate from the person with their hands on the cash. Okay, typical check. For those of you who haven't seen a check, a little kind of detail I left it in there because some of you may have never written a check, and that's totally valid because you live in a different world than I grew up in. But just a couple of things. When you're asked what routing number, it's always 9 digits. It's here. It's kind of like the bank's numeric address. Your account number usually follows, and then the last 3 numbers, if you never noticed, is actually the check number. Okay, it has to be written paid to the order of. This is the payee, right? It's got to have the banking information. You have numbers here, but you also have words that spell out what it is. These actually have more power than these because numbers can be doctored, but words are much harder to doctor. So just putting that out there. Okay. Some internal controls for banks, right? Minimize the currency on hand. Double record of cash transactions. Okay, so what that means, and this is going to segue into our main numbers calculations for this chapter, is a bank reconciliation. If you are the staff accountant, you are going to have to reconcile what the bank says with what your ledgers say every single day. All right, the first thing the accountant does is they go get the cup of coffee, sit down, and they reconcile. And you do the same thing, really. How often you log into your bank account and just take a look at the balance and make sure it's exactly what you expect it to be, right? If you see a charge, you're like, hey, what is that? Or money went in, you went, oh, good, I got paid, right? That's a bank reconciliation. Of course, on the business level, it's a much more involved process, but it's the same premise. Your bank records, whatever's on your bank statement, I know not a statement like you're getting mail in the mail, but when you open up your bank records and it doesn't match your books, your cash ledgers in your business, you have to figure out why, right? If you're going to say that has 10,000 and this has 8,000, you're going to figure out why. Well, it's done more formally. It's bank reconciliation, and it's done more formally in a business, but that is done like every single day. It is like job number 1 to make sure that the cash in the bank matches, or at least you reconcile to why the cash in the bank is different than the cash in your records. Most businesses, just put it out there, have 2 bank accounts for the most part. At least you have a general bank account with all the ins and outs regular. And a lot of times the payroll account will be separate from that. It's just kind of a good internal control to have. Okay, bank reconciliations. What you do is you start off with the balance on one side, the bank's records, and you have your records, your books. And the idea is if these two don't match, then you have to reconcile them. You have to go figure out why do they not match. And there's a bunch of reconciling items to cover. All right, and the idea is at the end, these two balances should agree. You should be able to reconcile the differences between the two. So when I do this, I like to think about who doesn't know, right? So this is the bank's records, these are the books. Who doesn't know? Like I said, that's how I like to think about this. So cash balance on the bank statement, cash balance on the depositor's books. So the first, we're going to start on this side. A deposit in transit. Okay, so the idea here is, let's say I put money in the bank account last night and it was the end of the month and it didn't hit the records yet. Like it hasn't cleared the bank yet. The bank has not, like I opened up the money drop, I tossed it in there, closed it up on the side of the bank, but they haven't counted it yet. They haven't verified it yet. That is a deposit in transit. They don't know about it yet, the bank, because they haven't counted it. I know about it on the depositor side because I put the money in the bank. But that's considered deposit in transit. The bank doesn't know about it, so they need to adjust it. We need to add that number to their side. So like I said, I'd like to think about who doesn't know. The bank doesn't know that money's coming yet. You do. So we need to reconcile it on the bank side. The next thing, outstanding checks. How often have you written a check? Company writes 20 checks a day and sends them out. If they're not cashed yet, right? They put them in the mail. It's going to take a few days. That's called an outstanding check. The bank doesn't know you've written them, so we need to adjust. That's an adjustment on the bank side because they don't know that you've written these checks. All right. Plus minus bank errors, if there's any mistakes. Don't worry, we'll do this in numbers in a moment. Cash balance on the depositor's books. Well, let's say the bank collected money on my behalf, which happens sometimes. Sometimes people just send money directly to the bank. All right. Well, I open up my bank statement, my online bank statement, and I go, oh, they paid me. Awesome. Great. All right. I need to update my records to show that bank collection. I need to add it on the depositor side. Interest. You open up your bank statement again. You go, oh, look at that. I didn't know I got interest. Awesome. $3. Let me add that to my records. Electronic funds transferred. Again, plus minus, right? Money coming out, money coming in. Maybe my utility bill got paid and I open it up. I go, oh, my utility money came out. Okay, I got to subtract that. Or I might have to add it if somebody paid me. Service charges. How many times have you opened your bank statement and seen they got charged for something, right? So you're going to have to update your records because you didn't know you got charged for something. NSF checks. NSF check stands for non-sufficient funds, which is a bounce check. Somebody wrote a check to you. It was no good. You deposited it. You thought you had the money. They went through the system and it bounced, meaning that there wasn't enough money in the account. So with that, you went, oh, I thought Joe paid me. Joe's check bounced. I have to now subtract that from my records because I didn't actually get paid when I thought I did. And if there's any errors. After you do all this, these should balance. So let's go through one real quick. Cash balance on, we've got Cartwright, that's the company, right? So it's the books records, and we've got the bank's records. So we're going to put the cash balance from the bank statement, $10,410 here. And I'm going to do this quickly, so pause me if you need to. And on the general ledger side, which is my books, $98.90. I don't balance, I have to figure out why. Deposit made on October 31st, not recorded on the bank statement. Like I said, who doesn't know? The bank doesn't know that the deposit was made, so I need to update the bank's records. Deposit in transit, 1865. I made the deposit, I know. The bank doesn't know. Okay, bank collection of customer accounts receivable. So the bank collected money on my behalf. I didn't realize that. I went, oh, great. All right, so-and-so paid me. Fantastic. I need to update my records to reflect that collection. Outstanding checks. All right. I wrote these checks. The Cartwright wrote these checks. The bank doesn't know about the checks because they haven't been paid yet. So if that's the case, I need to subtract outstanding checks from the bank side. They didn't know about them. Interest revenue earned on checking account. Woohoo! We got $200 in interest. Okay, great. I didn't know about that. Cartwright didn't know, so let's add that. Interest revenue, $200. Electronic fund transfer, rent payment. All right, bummer. Rent came out. So be it. I didn't realize that it was coming out. Here it is. There's the subtraction. Bank service charges, $50. Darn it, we got charged bank charges too, so we didn't know that either until we opened up our bank statement. So let's update that. NSF check, somebody's check bounced. J Lane here. That's probably why I got the bank service charge. All right, so there's $100 out there. Okay, last one. Cartwright, us, the business, recorded check number 548 for $152 instead in the payment of October utility bill as $125. I made a mistake. I transposed two numbers. I switched them. So if that's the case, I need to fix myself by the difference here. Right, 152. I have a book error. I recorded it wrong. So I have to subtract the difference there, the $27, because it should have been $27 higher. I add and subtract on both sides, and there you go. I balance. All right, along with this, so now I have this. I reconcile. This was the first job of my accountant in the morning. I'm done with my coffee. Good. Next step, though, is these are my books. I need to make journal entries for all of these things. I've got some bank charges in there. I've got some interest I collected in there. So for all of these guys on the book side, I need to update the journal entries. So let's go over here. Start off with $98.90. Bank collected accounts receivable for me, so I got a debit to cash, $12.60, and a credit to accounts receivable. Great. Okay, so here's my $12.60. I got interest revenue of $200. Awesome. Debit cash, credit interest revenue. Another $200. Rent payment went out, So be it. Part of my job. All right, I got to pay rent. So debit to rent expense 150, credit to cash 150. So let's take 150 out of here. Okay, so I've recorded some of them. Going to the next page. So here I carried these over my T account. Bank service charges, bummer. Debit bank expense or some sort of miscellaneous expense, credit cash. Let's take that out of here. All right, Jay Lane's check bounce for $100. So not only do I not get the cash, I have to put his receivable back on the books because he still owes me. So we've got a debit to accounts receivable, credit to cash. Take that cash out of there. I thought I had $100, but I do not. And the fix for my utilities. Debit utilities expense, it should have been $27 higher. Credit to cash, 27 out. I subtotal at this point. There's my 11,023. Okay. So, well, here's a try it for you. Pause me, try it on your own, and I'll give you the solution as soon as we get to the next one.